powerful miss and squeeze trend is dominating the markets recently. So what is it and how to actually use this to trade the Federal Reserve decision tomorrow? This is exactly what we're going to show in detail in this video. So focus on this chart. UNP, miss and squeeze. Basically, Union Pacific misses the quarter, initially drops. Then, despite of the miss, they continue to buy the stock. Now, typically, in a regular market environment, you would continue to see a further drop in the stock of UNP. Now, notice as we go through this chart, there's multiple different various sectors. We're not just containing this miss and squeeze phenomenon to just one sector. Domino's Pizza, huge miss, horrible quarter. The stock drops immediately. That same day after the stock opens in the morning, they begin to buy the stock. And they continue doing so. So miss and squeeze on Domino's Pizza. Basically, the miss pertains, guys, to the fact that the company is actually missing the earnings. It could be earnings miss on the earnings side. It could be earnings miss on the sales revenue number. It could be earnings miss in the shape of further projections for the next quarter outlook for the company. So it could be a combination of 2 or 3 of these factors. But basically, companies, when they typically miss, you don't expect them to all of a sudden move in this crazy 13 type formation, or what resembles a 13 in most of these charts, guys. And 13 when things drop and then they pop almost immediately. So DPZ, miss and squeeze, clearly you can see that on this chart. Goldman Sachs, missed the quarter, drops, and continually moves higher from here. Now, all of this stuff has been developed over the course of the last 2-3 weeks. Now, it is actually happening to more and more stocks. ODFL, Dominion Freight, huge miss on the quarter. The stock drops and pops and bounces. So miss and squeeze. The squeeze pertains to the fact that a lot of short sellers are being squeezed out of these stocks. And they have every right to be short when a company misses the quarter, because the crazy part about this, the main reason why so many companies are actually beating the earnings expectations this earnings season, because the expectations have been lowered to the point of ridiculous. So when they have been lowered to the point of the ridiculous and companies are still missing the numbers, it's horrible. So technically they're supposed to be dropping, but we're seeing exactly the opposite is actually taking place. So it doesn't matter what sector we look at, this miss and squeeze phenomena is dominating the earnings season so far. Now, the question we're asking ourselves on Friday, October the 25th, will Amazon actually join the miss and squeeze phenomena? And we suggested actually buying Amazon calls that expired this week, last Friday, to our 13 Market Moves Analysis members. And so actually, clearly, same identical pattern, just like with the charts I've shown you guys. Amazon officially did confirm the miss and squeeze pattern last Friday. Now, the importance of that is it officially actually helped set the bottom in the worst performing tech sector, which was the cloud sector. The cloud number on Amazon Cloud Services actually came in short. They were expecting 9.1 billion. It came in at 9 billion. But any slower growth in this cloud sector for Amazon, because that's where it basically makes all the money, should have been a definite negative for the stock. However, it created this version of a move 13. Not quite, because it, on Friday didn't quite clear the level from where it dropped. But yesterday, on the 28th, it did manage to move higher as well. So despite of this negative miss for Amazon, it is able to actually sustain the level and move higher from here. If you look at the chart, Amazon was recently going through a death cross formation. So when you see this substantial move on bad news higher, that actually tells you that the stock will be moving higher from here on for a number of days. So notably, important to underline here that while Amazon missed the quarter, all the analysts were actually cutting their target prices. Some were cutting the target price on Amazon from 2,200 to 2,100. Some were cutting from 2,400 to 2,200. Some were cutting to 1,950, and so on. But while they were doing that, they were maintaining the buy rate on Amazon, and they were actually buying the stock while they were slashing the target prices. So typically when analysts are actually slashing the target prices, that's almost, even though they maintain the buy rate, and that actually results in a sell-off in the stock, because in a way they're saying, hey, We thought things were going to be good, but now clearly we're slashing our target prices because we were wrong. So it's almost like putting a sell rating, but they don't want to put a sell rating because that would tank the stock quite a bit. So they maintain the buy rating while slashing the target price. Well, in this particular case, we're seeing exactly the opposite of what typically happens. So they're slashing the target prices while they're buying the stock, and they actually buying on pretty strong volume when Amazon actually opened up Friday. And that trend is continuing despite of Amazon actually losing the contract. So Amazon, within 48 hours, gets hit with a ton of negative stuff. It does officially hit our target price of $1,650, which we've been talking about for the last few weeks. But as soon as it hits that, it bounces out of it. So how can we apply this and utilize it in trading Google earnings, which we were very bullish on yesterday? We did point out that there was a slight probability of a miss and squeeze in the earnings of Google. We're going to talk about that in just a second. But just to finish this idea here, guys, Move 13 formation on Amazon was not 100% complete Friday, but it certainly had characteristics of that Move 13, which suggests multiple days higher from here. In yesterday's pre-market video for our members, we did point out that we're very closely watching Amazon behavior because if indeed in the next 48 hours the move higher in Amazon continues and does hit a level of about 1800, which we think it could actually accomplish today or tomorrow by the time Federal Reserve actually announces its decision, it would actually show us exactly what will actually happen when the Federal Reserve will announce the decision. So very important to understand that this behavior in Amazon sets a bottom. It looks like not only they're beginning to buy Amazon, but all the stocks have been heavy hit recently, like Now, NOW ticker, Workday, CRM, all these famous cloud stocks, okay, they're finding a bottom here. Now, considering some of them were recently off of their highs, 20-30%, it actually could be one of the best buy in the markets to play on the call side because everything else trades pretty much close to all-time highs. So Google miss yesterday on earnings is actually substantially better than Amazon miss because Google business, like in Amazon, cloud services that generate pretty much most of the income for Amazon, they're slowing down. Now, Google's advertising revenue actually hit all-time high. Now, the reason Google missed the earnings number is because it actually spent too much money on some of the other things that they're exploring. But that makes perfect sense. Their business is not hurt. They set a record sales number from their advertising sales, and the core business in Google seems to be doing extremely well. The fact, as a matter of fact, that they do want to spend more money when they're raking in more sales, record sales in the company's history, it makes sense that they want to utilize this time to actually spend more money to diversify their business in other areas. So there was actually nothing wrong with the Google quarter. The response, however, based off the fact that it did miss, okay, resembles the characteristics of all the charts that I have shown you in this video so far. Now, the only difference that we're noticing so far this morning is opposed to the situation with Amazon, while analysts were actually cutting the target prices on Amazon because of the Amazon's miss. In situation with Google, they're actually raising the target prices for Google. So far, we have not heard from a ton of analysts, but the ones that are raising the price targets from 1,500 to 1,546, $1,450 to $1,520. So the bottom line, despite of the miss, okay, all the FAANG stocks, your Googles, Amazons, Facebooks, and so on, the number one thing that analysts typically want to look at is the growth story. Okay, so it would have been much more hurtful to the stock if actually Google would have missed on the revenue, on their sales number. Okay, so in this case, the sales number hit record high for Google, and the probability that we'll continue buying the stock is extremely high. So miss and squeeze trend in Google is likely to continue today. I'm recording this about 7:30 in the morning, so the stock is trading at 1269. It is likely to reverse and move about 1300 at some point today. And if you listen carefully to the strategy we recommended in the video we posted yesterday about Google earnings, we suggested buying specifically next week's expiration just in case there was a slight probability that it was actually going to do this miss and squeeze type formation. So at the open, we're still very much in favor of call options for next week in Google, simply because the premiums on those options were actually not much more than the premiums for this week. So that was an easy way to play. Google still is one of the easiest trades for this week, guys. Now, as far as how can we apply this information in trading S&P futures, the Q futures, basically how will the market overall respond to the Federal Reserve decision tomorrow? Well, we believe that there is nothing that's going to make this market completely happy at this point. So we can have a situation in the form of miss and squeeze, but not relating to the earnings report, but relating to the Federal Reserve decision, meaning that there's nothing you can do right now to make this market 100% happy. So despite of what the initial announcement is going to be, which there's a high probability they are going to cut a quarter point, but what everybody's going to be watching is what's actually going to be happening next. Are they going to pause? Are they going to still be very dovish for the next few quarters? Everybody's going to be listening to what's next. But even in the event that, let's say, they don't cut the rate, yes, the initial reaction is going to be lower. So despite of this nice, beautiful, bullish cup with a handle formation, initially we could see this followed by a move higher. So it very much could play out just as our target on Amazon, since it was 1,800, it's been, our target on Amazon has been 1,650 bucks. But you saw that as soon as that move in Amazon lower did take place and it actually dropped below our target price, at one point it was trading like at 1618, 1620, right? It didn't stay there very long. So we could see very similar behavior tomorrow in the markets overall. They could tank rather rapidly, followed by as much of a rapid move higher as we've seen in a lot of these companies that have been missing. So the miss part on the Federal Reserve decision is basically going to equate to them saying something that the market is not fully expecting 100%. And yes, it is going to resolve into a fast, fierce move lower, followed by a market realizing, well, hey, we've been buying everything else. We didn't care about all these companies missing earnings. Okay, we bought them anyway. So they're going to say, well, you know what? Hell with the Fed. We're going to buy the damn miss on what Federal Reserve is actually saying right now. So likely we're going to see this. Now, take it further, a step further. Okay, basically expect the miss and squeeze. So basically every chart I've shown you is what we're expecting from the Federal Reserve decision tomorrow. Basically a miss and a squeeze type formation. And as a result of this miss and squeeze trends, okay, stocks are actually escaping the death cross, and it is very meaningful to observe this in case of Amazon, for example. Here's your death cross, the stock drops, followed by immediate bounce, short squeeze right here rather rapidly, and this actually temporarily helps Amazon escape this death cross. So it hasn't actually, once the death cross has taken place, as you can see, it has not dropped substantially. We're not counting this fast, fierce drop because it followed by pretty much immediate rise. So it's likely to trend higher, probably back to this area of 1825, 1850 before the much bigger drop is going to resolve. And that's basically what we're projecting for the rest of the market. So basically, if you're trying to trade this tomorrow, if you're trying to trade this over the course of the next month, expect this. Expect the quick drop after the Federal Reserve announces decision, followed by amounts, continues to move higher and higher, probably over the course of the next couple of weeks, followed by a sharper drop at some point. And clearly, us being the short sellers of this channel, we are definitely going to be timing the moment at which would be perfectly wise to short this market at a higher level. But at this point, the way the institutional behavior is showing us the way over the last few weeks, okay, even if the Federal Reserve is going to mess up, and they're not going to deliver on a hugely dovish outlook, okay, the market is actually overall going to take it as a positive. Now, everybody's expecting, if the Federal Reserve is not dovish tomorrow, that it's going to crash the markets. It's going to tank the markets. Initial reaction, very likely, yes, but not the follow-through reaction. So as a day trader, as a swing trader, you really want to catch this move lower to the downside on the put options. You definitely want to catch a fierce possible reversal the same day or the next day on the bullish side. So this could be a hugely profitable trade that we would call a round trip trade, where you basically profit on the put side and you profit on the call side. With that said, guys, trade like a rock star. I'll catch you on the next trade soon.